Hello, everybody. Let's discuss on input tax credit under GST. What are the conditions to be fulfilled to claim ITC? Uh, uh, so let's start. So when in July 1st, 2017, when GST was introduced, government had fulfilled that there would be no overlapping of taxes. This has been 100% uh, confirmed and uh, done by government, since there are no more taxes, additional taxes, and there is only one tax, that is GST, one nation, one tax. There is no multiple taxation like service tax, uh, uh, central sales tax, VAT, excise duty, etc. Reducing tax on tax effect. This has been also done to a large extent, since uh, there are we can claim ITC over goods, services, etc. But yes, there are certain blockages like section 17 subsection 5, block credit and composition scheme. So ITC was the only one reason and only strong reason enabling reduction of prices in spite of proposed higher rate of taxes under GST. Higher tax rate under GST is to the extent of 28%. But since tax is allowed as a credit, we can say that ultimate uh, price of the price of the goods would reduce, since there would be no tax on tax. With this, let us understand one example on ITC. So let's say that there is a supply chain whereby Mr. A sells goods to Mr. B and Mr. B finally sells goods to the end customer. Mr. A has sold goods to Mr. B worth rupees 1 lakh, charging GST at the rate of 18%. So the final invoice value is 1,18,000. Now, suppose this transaction has been done in the month of December 2020. So Mr. A has to file GSTR1 on or before 11th of the next month, that is 11th of January 2021. Pay the taxes collected from Mr. B, that is 18,000, and file GSTR3B on or before 20th of January 2021. Now, when Mr. A will file GSTR1, the same will be auto-populated in the GSTR2A of Mr. B, and this will be considered as ITC for Mr. B. Now, suppose extending this example, now suppose Mr. B sells this goods purchased from A to the end customer at a cost of rupees 1,20,000. Again, GST at the rate of 18% is 21,600. So the final invoice value is 1,41,600. Now, suppose this transaction from B to the end customer is also done in the month of December 2020. So Mr. B also has to file GSTR1 on or before 11th of January 2021. And he has also to pay the taxes and file GSTR3B. So the total output tax liability of Mr. B is 21,600. How the same would be paid by him? So out of this 21,600, 18,000 is available as input tax credit. So it would be paid through credit ledger. And the balance amount, that is 21,600 minus 18,000, 3,600 would be paid through cash ledger by generating challan. So this was a small example to explain how the ITC works. Now, to claim this ITC, there are certain conditions to be fulfilled. Now, what are those conditions? Let us understand this. So on the, there is a cursor, you can just see this. So what are the conditions for availing input tax credit? The first condition is that registered person should be in possession of tax invoice or debit note, and second, should have received the goods and services or both. So the buyer should be registered under GST, and secondly, he should possess the tax invoices as well as the goods and services. Now, the tax charge in respect of such supply has been actually paid to the government. So the seller has to make sure that he has filed GSTR1, paid taxes collected from the buyer, and ultimately filed the GSTR3B return. So these are the basic conditions to be fulfilled by the seller as well as by the buyer to rightfully avail ITC under GST. Now, please understand that GST is available, ITC is available both under forward charge as well as reverse charge mechanism. So it is available. Now, it is available when capital goods are purchased, like plant and machinery, but not available in case land and building and other civil structures like telecommunication power towers, pipeline outside the factories, etc. One condition needs to be fulfilled, that within 180 days of availment of ITC, we need to uh, uh, the buyer has to pay to the supplier. That is, if the goods have been purchased on credit, the same needs to be paid off or squared off within 180 days. If it is not done, then the GST which is availed has to be reversed along with interest at the rate of 18% per annum. Suppose, take an example, that goods are purchased on 1st of January 2021. So uh, uh, the buyer would avail ITC in the month of January 2021. Now, suppose it is not paid till 30th of June 2021. That is, 180 days are elapsed. So in the month of July, the buyer has to reverse the ITC, which is availed in the month of January, along with interest at the rate of 18% per annum. So that's all for this lecture, this video. In the next video, continuing series, we will cover section 17.5, that is block credit when ITC is not available. And we will also discuss rule 36.4, which speaks about availability of ITC, which is basically a comparison between ITC as per books of accounts and GSTR 2A. We'll also discuss about GSTR 2B, what are the benefits of downloading and checking the same. Thank you so much. Thanks for your patience hearing. Please subscribe to my channel if you have not done till now. Thank you so much.